Hey, what's up everybody? So we've got a fairly interesting video today about AT&T stock. So we'll just get right into it. They've projected free cash flow starting in the year 2022 and onward about 20 billion. So based on the estimates that they've put out there with their management team, what they've come up with, their stock price actually comes close to around $40. We'll do a quick run through of that, but just actually kind of think of what that means. I mean, the stock price is around $24 a share right now, and their management is putting it out there saying, yeah, it's easily basically around 40. They didn't come out themselves and say that, but we ran the numbers based on free cash flow that they said, ran a DCF model based on that, and that's close to the value that we get. Now, I mean, real quick, we do have to say that normally when you run a discount cash flow model, you're projecting revenue out, then you're projecting net income, and then you're projected future free cash flows, and you go from there. But we do run into a little bit of a problem when it comes to AT&T stock with that. I don't like the idea of trying to project revenue out by a growth rate and going from there. Fact of the matter is AT&T is very hard to read for projecting revenue accurately, I feel. Remember, in 2015, they took on DirecTV, then in which upped their revenue and made it look like it grew at a rate from the previous year more than it really did. Then in 2018, their revenue jumps up again because, well, they added in Warner Media. Then into 2021, they spin off DirecTV, and now the revenue looked lower than it was from year before when they had everything. And then they're going to be spinning off Warner Media in mid-2022, which is going to just F with the revenue once again. And if you look at their history, because of these acquisitions they made, the revenue is way too all over the place, which means we're probably not going to be projecting net income or free cash flow from there too accurately. The beautiful thing about the DCF model, though, is the point of it is to project from revenue and then net income, right? But that's so that you can get the most accurate free cash flow measure possible. But if AT&T is already giving me the projected free cash flow for 2022, I can cut out revenue and net income and just go straight from there. Because at the end of the day, the DCF model is about projecting future free cash flows and discounting them back. And so that's exactly what I did. I took the exact number that they gave, which is 20 billion in free cash flow for the year 2022. We have to project it out. Their management team guided for single-digit growth from here on, but you do have to take into account that that is in regards to revenue growth. But I think that in terms of free cash flow growth, 1% is still being very conservative, so that's what I'm going to use. So we take the 20 billion in the year 2022, grow that out 1% out to the year 2026. We do what we would normally do with any DCF model, get a terminal value based on last projected year free cash flow. We discount all those numbers back, we add everything up, we divide by shares outstanding, and the fair value, according to the projected free cash flow they gave, 39.08, or roughly a $39 share price. So based on the free cash flow that they projected themselves, they're basically telling you today's fair value is about $39 a share, which makes the stock very undervalued. Remember, it's at like $24 a share right now, so that is a really good deal. That's practically a 2x in fair value right now, and do take in mind that this is with Warner Media already spun off. So they're basically saying $39 a share at fair value right now with Warner Media already spun off, which means this doesn't even factor in the free stock you're going to get in the new company that's formed once Warner Media is spun off. So according to management and how they're projecting this free cash flow, that's an extremely compelling buy according to this model. But like any video I do, we still have to do our own conservative version. AT&T's management says $20 billion in free cash flow starting in the year 2022. Let's go way conservative and say $18 billion and grow the free cash flow out at the 1% rate still. Forgot to mention it from the prior model, but I used a perpetual growth rate of 1%. My go-to is 2.5%, but it's such a saturated company by this point, I wouldn't even want to say 2.5% is a good idea. So I will be applying a perpetual growth rate of 1% to this model as well. We also want to take into account that I'm using a 6.8% weighted average cost of capital. Got that number from finbox.com, and I had also used that on the prior model we just went over. And hey, after we run all the numbers out, guess what? The fair value still comes to about $35 a share. And that's with us being very conservative, saying $18 billion in free cash flow starting in the year 2022. Honestly, the buy for this looks very compelling right now. You have to keep in mind that their free cash flow for the year we just had, 2021, was $25 billion. And they themselves stated, management, that Warner Media's contribution to the free cash flow is only around $3 billion, so that then puts it at $22 billion for the year. And DirecTV was spun off during that year, and I just can't imagine that they even contributed $2 billion worth to that free cash flow. So 2021's year without DirecTV or Warner Media was probably already over $20 billion in free cash flow. So if we're being honest, I mean, management's projection probably isn't too far-fetched. I did my own conservative version just because at $18 billion starting in 2022, but management's projection really isn't too far off if we're being honest, which again puts it at nearly a fair value of 40 a share right now. Now, I do want to go over some things. First of all, I'd like to say, what are my thoughts on them spinning off DirecTV, which they've already done, and spinning off Warner Media mid-2022. I personally think it's a very good thing for their business. It was a terrible idea from the start, and the new management with the new CEO saying, hey, we're spinning all this crap off, all the media. We're a telecommunications company, and we're going to focus on being good at that. I think that gives a relatively nice outlook for this company in terms of where they're going. They're saying they're going to focus on what they need to focus on. They're getting rid of their baggage. They're getting rid of debt along with this. It all seems like a win-win for me and a foot in the right direction for them. Now, we of course do have to talk about the negative, and that is, even after this $43 billion that they're getting for Warner Media spinoff is attributed, they're still going to have quite a bit of debt. So moving forward, as long as they can meet this projected free cash flow and do well with this, what you'd really want to see with AT&T is them take that generation of the free cash flow, and you'd want to see them pay down this debt consistently every year. The pay down of this debt is very, very important because it's a huge negative on their balance sheet right now. And once they're caught up paying down that debt, what I'd really like to see next after all that is them take that free cash flow they have and start buying back shares consistently. Worry about the debt first, of course, but buying back shares in the future will only provide more value to shareholders. So look, just to recap, this stock, according to the numbers we ran for management's projected free cash flow, it puts it at about a $39 value right now per share. And even my very conservative projection on free cash flow still put this company at $35 a share fair value right now. According to the model, it's a buy, and I'd argue that if you believe in management's vision and believe that they can execute, this is definitely a buy right now. Again, make no mistake, the model says that it's very undervalued. If they can go back to focusing on being a telecommunications company only and do it the right way and execute like they're saying they will, this is definitely a buy. All right, everyone, so that's it. We're going to wrap the video up. Now, do you feel that AT&T is a buy, or do you feel it's still too risky for your taste? Let me know down below. And if you like this kind of content and you feel that it adds value to your day, go ahead and give the video a thumbs up and subscribe to the channel. and I will catch you in the next one. Y'all have a great day.